Hello everybody, my name's Nicola and welcome back to my channel. This is the Frugal Cottage where we talk all things money to help you on your financial journey. Today's video is all about why I have 3 separate investing accounts and what the purpose is behind each one. Don't forget to like and subscribe and let's get started. So I have 3 different investing accounts and I get questions fairly often about why I have 3, what's the point in having different ones and what do they do. So I have 3 different ones. If you've watched my channel you'll know that already, I've shared them before. The main one that I have, and it's the biggest one, it's the one that's got the most in it and it's the one that kind of does the majority of my investing is within that, is my investment ISA with Hargreaves Lansdown. So this is a stocks and shares ISA. I've had this with them since 2016. It is the account I opened when I first started investing. It's also the one where I put in the £700 a month into investment. That's the one it goes into. That's the one that's our early retirement fund. In terms of that's where the passive income is going to come from, the majority of it. I get questions quite often about why I've picked Hargreaves Lansdown as a platform, as the fees are higher, and I'm well aware of this. I know that the fees are higher with Hargreaves Lansdown. I knew that when I first opened the account because I did my research. However, I find the website, the platform, the easiest to understand and the easiest to navigate, and actually their service is of a high standard. The services they provide, the quality of the service, the quality of the platform, I feel is good. And actually there are ways in which I minimise fees. There are 2 ways I minimise fees. Firstly, I only do 1 investment transaction, if you like, per month. I do not do multiple investments per month. A, I don't have the money for it, and B, that minimises those fees. And second of all, when I'm investing in funds via that platform, I look to ensure that the fund I'm investing in terms of fees, is particularly low. And the reason, say, I don't invest with Vanguard directly is because Hargreaves Lansdown has such a vast array of products. It gives me the opportunity to invest in different things. That's my main one. And yes, I am aware that the fees are higher, but that's the way you minimise fees. And over time, if your pot gets to a certain amount, the fees actually go down. So it kind of depends on how many. If you were doing trades in individual companies, say every day, then yeah, it would be ridiculous to have it with Hargreaves Lansdown. I do 1 a month, and that's not always in an individual company. That might be in a fund, and therefore the fees I pay, I feel, are okay. I've shared my early retirement portfolio. I'll leave a link below to that video if you want to check it out after this one. That shares every single investment I have in there and what the value at the time of recording was, and the balance between funds and individual companies. That's the portfolio that's going to provide us with our dividend income stream every month in early retirement. The second one that I have is my free trade portfolio. It's the experimental portfolio, that's what I like to call it. It is very small in comparison. I put in the £10 a week into that. That's the strategy. I'll leave a link below to the latest one of those. And that purpose for that one is to invest in growth stocks where I can't afford to buy 1 whole share, but free trade do fractional shares, so I can put in £10 into whichever one. That's a fairly small portfolio, it only has certain companies in it. Again, I'll leave a link below to the latest one of those. And the aim for this one, apart from being consistent in £10 a week over, say, a 10-year period, the primary aim for the free trade portfolio one is to get growth on your investments, so that the growth comes from investments rising in price, and that's where you make the profit. It is not looking at dividends at all. In fact, most of the companies that I've invested in, I think all of them in fact, do not pay dividends within that free trade portfolio. That is not the strategy for that one. So the strategy for the free trade one is growth stocks, £10 a week. And actually I think the majority of them are American companies as well. The third one that I own is the trading 2-on-2 portfolio, and again I'll leave a link below to the last video I did on that. I can't remember what it was, about a month ago. There'll be one coming up as well. But the trading 2-on-2 portfolio is another stocks and shares ISA. It's in my husband's name because I already have one. My ISA is the Hargreaves Lansdown one. My husband doesn't have one. You're allowed one each as an adult in the UK. And the idea behind the trading 2121 is American-based dividend income paying stocks. Again, lots of the companies, the American companies, are higher value, as in they cost more per share. And trading 212 also does fractional shares. So one of the only downsides to Hargreaves Lansdown at the moment is that it doesn't do fractional shares in individual companies. You have to buy like around a whole number. Trading 212 allows you, like free trade, to buy different tiny portions of a share. So for example, I've got, again, American based stocks in this ISA, this Trading 212 ISA, that pays out. And those companies are partial shares because I can't afford at the moment, the strategy wise, to buy whole ones. The difference in the Trading 212 is that I put in £25 every other week, so every fortnight £25 goes into there and I purchase whatever I am keeping my eye on. Again, I've shared below, or I'll link below the one that I shared last time, but they are the 3 different strategies for the different investment portfolios that I own. Essentially, they're all there and do very different things. That's it. That's the only reason why they're different. The main one, the one that I don't touch, the one that should grow the most, is my own investment one, Hargreaves Lansdown. The other 2 are slightly more experimental, slightly more less. They're never going to be as big. Because I'm not putting enough money in there. I'm not putting as much, nowhere near as much. I guess it's more money that I essentially feel that we could lose, but also they're much more risky in terms of they are both just individual companies rather than the funds, which are less risky. So I hope that answers some questions as to why I have 3 different investment portfolios. Does that make sense? Let me know down below in the comments if that makes sense. It might not do. But for me and our strategies and our long-term plans, that's why we've got those in there. And I'll leave a link below to the Trading 212 platform. It's a referral link. If you use my referral link, we would both get a free share up to the value of £100. I'll leave that below as well. But as always, thanks for watching. Don't forget to like and subscribe, and I'll see you tomorrow for another video in Vlogmas.